Hey, good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for the 10th day of April. Well, here we go. Another long weekend, another what's going to happen in the Persian Gulf weekend. Right now, crude oil is trading at 97 bucks, 97.66. So nothing explosively higher there. Uh, the big level I think to watch is this 95 to 85 level. If you're not getting my letter, you can see what I'm talking about. I send it out every day. Once the markets are closed, I spend a couple hours and I go through all these markets and I look at the technicals and I give you a snapshot of where the risk reward areas might be. I give you a snapshot of where I think that there might be opportunities for both bulls and bears. I try to keep it neutral. And if you're looking for information like that to help you make better decisions, please take a look at my letter, robinsonagmarketing.com. I do provide specific cash sell targets and percentages. I do suggest specific hedges if you have risk. So if you're looking for that type of information on a daily basis, again, Monday through Friday, plus then on the weekends, I do a weekly wrap. And then also once a week, I do the private client webinar. I'm doing that today. There's a lot of stuff I want to talk about and dig into the charts. So it's about a 15-minute webinar. You can take a look at it, have a cup of coffee, and see a little bit more deeply into what it is I'm looking at, what I'm talking about. Uh, Overnight, May corn down a penny after a 4 cent range. D's corn down 2 cents. I would watch 470 to 469. Why is that a big number in D's corn? Well, it is the middle of the road, guys. We had a contract low of 439, a contract high of 498 and a half. We just hit the high at 98 and a half a while ago, not that long ago, on the night of the really when the bombings began, right? So that was a short-lived spike, close to $5. We're sitting here at 472. Um, it's anybody's guess where we're going to go. A lot of it depends on weather right now. We certainly know that there's going to be a bigger crop coming out of Argentina than people had imagined. That's more price, more supply generally is not conducive to higher prices. I think at this point, the one thing we've got going for us in the corn market is we continue to have excellent demand. The cash, the uh, weekly sales have been very strong. And but if you look at what the USDA did, they left everything alone, right? They really didn't change the carry out. They did increase the carry out for wheat. That was the one bearish surprise. And wheat, of course, took it on the chin yesterday, hitting a 1 month low. But corn and beans, there's still a lot of possibility out there. We're heading into the planting season. I don't know if this is going to be a 2012 year where we get a drought and take off. I don't know. Nobody does. In the meantime, I would protect 470. Some of you have 480s protected with me. I would at least protect 470 or 465 corn. You can do that for very little. I've had that in my letter last night. And new crop beans, we're sitting here at 1155, 1160. You can get an 1130 floor for not a whole lot of money for a month or two here, and you can sit back and hope for higher prices and not worry if the market does collapse. At least you can have 1130 or 1140 covered. So that would be the strategy for a farmer. The wheat, I would maintain all the puts that we put on when we had that $1.25 rally. We had a rally from contract lows to 1 year highs. We tried to take advantage of it for our wheat producers. And again, this is all part of what I do with my daily letter. I send out the recommendations. I send out text messages revolving around those as well. In the protein complex, we're going to see, cash was stronger last night on the close. Some bids went on hit. The story is, the Packers keep coming for it, and um, the stock market, is almost completely recovered what it lost. We lost about 10% on it flush, and then we've clawed back about 8% of that. So a whipsaw. It's been supportive here for cattle. I would take advantage of this, and we'll find out together. Is this going to be a big double top? We're back up to where we were back in October. Remember in October when we dropped 80 bucks in feeders and 40 bucks in fats, right? We've clawed all that back. So something definitely worth hedging if you're a producer. Moving over to the hogs, the only thing I'm worried about there is the deferred hogs have been in a great rally. Go out there and look at October at Dees. We've got a 13-cent rally. We're near the top again. There's always a possibility of something coming across the wires that sends us lower. So that would be my caveat there. Get something on on those deferred months for lean hogs if you're a hog producer. Right now, the stock market is sitting here at 48,400. The S&P sitting here at basically 68.75, slightly higher on the day. Crude oil trading right at 97.98. So obviously lots of risk this weekend. If you're looking for help, give me a call, 312-638-8868. I'll talk to you tomorrow. Take care.